Thanks, guys. Excited to be live again with the next true story debate. And today we're going to talk about the big wealth disparity problem in Bitcoin. And I'm just going to make sure my camera looks good. Okay, cool. And this is a topic. This is not going to be a topic that we solve in 1 hour for sure. But the purpose of this conversation is to at least get the conversation started, because I don't think people realize how concentrated some of the wealth in Bitcoin is. And today we're bringing in two guests who have somewhat differing points of view on this problem and whether it's even a problem in the first place. And so we have Vinny from Civic as well as Dan from Kraken. So I'll give them 30 seconds to give a quick intro about themselves before we jump into the topic. Vinny.
Okay. Thanks, Preeti. It's great to be here. I'm Vinny Lingham, co-founder CEO of Civic, and I previously started a company called Gift, which was a gift card platform, a world gift card platform where we used Bitcoin early in the days, 2013, to facilitate fraud-free transactions online. The gift card space is notorious for credit card fraud. And so, I learned about Bitcoins back then and got involved in the industry. So for the past 6 or 7 years.
Cool, thanks.
Yeah, thanks for having me, Preeti, and appreciate the intro, Vinny. So my background, I started in the crypto space in 2012, built my first product called ZeroBlock in 2013, which was acquired by blockchain.com. I came on board there as the first product manager in December 13. Later down the road, spent 2 years at Uber on writer growth and the intelligence team. Left there to co-found Interchange back in the crypto space, which was recently acquired by Kraken. So a lot of the stuff I've worked on is trading infrastructure. I think that's kind of the general gist of what I've done in the crypto space.
Cool, awesome. So let's just get into it. So I tweeted this morning about kind of what I found as the facts with Bitcoin wealth disparity. And what I discovered based on the data that we have is that about 2% of addresses own 80% of the wealth. And I think that's a problem, and I think it's worth talking about. And so I know Vinny also has a strong point of view on why he thinks this is a problem. So before we even get into all that, I want to give Vinny a chance, because Vinny was actually the first person that brought this idea up to me of even debating this topic, because I think he's been kind of observing this phenomena happen and wanted to bring it up. And so, Vinny, I want to give you a chance to kind of talk about why you felt compelled enough to want to debate this and why you think it's a problem.
Look, I'm a bit of a truth seeker, so I like to see what is the truth versus what is the emotions around the situation. I think Bitcoin is a very emotionally charged topic, right? A lot of people, they have visceral feelings about what Bitcoin is, what it does, and what the future holds. And and I know a lot of these people. I go to these conferences. I've been in the industry for a while. I know people have been in very, very long periods of time and seen the ups and downs, like I have myself. And I like to look on the horizon and see what's going on and where we're going with this. And I've had some concerns around scaling for a couple of years. It's just well known. I used to be a very big Bitcoin bull, and then I got concerned about scaling and some other issues. And it is what it is. Bitcoin keeps going, and that's fine. But as a society, we should not lose sight of what the end goal was, and at least when I got into Bitcoin, and whether we can still get there. So I'll start by throwing out, and I like using extrapolation as a way of solving, like extrapolating, points in time and values really gets you to understand and solve problems. So if you look at the Monty Hall problem, for example, extrapolation actually helps you solve that problem by looking at very large numbers. So Dan, I'll throw this out to you. If the price of Bitcoin magically leapt to $10 million a coin today, do you think the world would have a problem?
I think first we need to define the problem itself. So the Gini coefficient was created to look at income inequality for countries. And that's important because in countries, when the income becomes highly unequal, those individuals with that money can exercise what we hypothesize to be large amounts of power. So I wanted to first define that as what we're concerned about, right? Or am I interpreting?
No, that's fair enough. But let's just at least start with some numbers, okay? So how many people do you think in the world own Bitcoin today, either directly or through an exchange account and an address? What do you think the number is today?
Let's throw out a random number that I think is probably popular: 50 million.
Okay, so that's less than 1% of the world population, right?
Sure.
Okay, so if the price of Bitcoin was magically $10 million today, do you think we would have a problem?
Well, again, we need to define what the problem is or what the objective of income equality should be. Like, what is the proper threshold?
But let's start with that, okay? The narrow money supply in the world today is $28 trillion, right? If the Bitcoin price today moved up to $10 million a coin, the total value of Bitcoins would be 180 trillion, which would be 6 times the narrow money supply of the world today, right? And 6 times that being held by 2%, less than 1% of the population. Do you think this would lead to a breakdown in society as it stands right now? I'm trying to extrapolate large numbers so we can get to understand.
It's not a simple yes or no question. We first have to define what is fair, what is objectively good or equal. In a capitalist system, money is risked on different entrepreneurial endeavors, and the individuals who risk that capital to invest in something are rewarded for it. We see this across VC, which I know you're a big VC investor. With the VC sector, we see very, very small numbers of individuals that are angels or accredited investors that have access to venture capital investments. So,
right. But sorry to interrupt you, but I'm not trying. I'm asking. Do you see an issue if at any point in time in the world we live in, with 7 billion people, if 1/7 of the wealth in the world set with less than 1% of the population, do you think that would be a healthy thing, regardless of how they earned it or not?
I think it's not really a good hypothetical situation, because in every single boom bust cycle we've seen in Bitcoin, the number of hodlers grow. So the number of participants in the network grow.
That's not the question. That's not the question.
It's not really a question you can ask. You can't come up with a hypothetical that says the number of hodlers remain the same, but the value 6x's, because when we look at on-chain data, for example, the unchained capital analysis of hodl waves, we see that the UTXO set becomes more and more dispersed over time through these market cycles.
Okay. So your argument is time fixes the problem I'm describing.
What I'm saying is that humans will act like humans. When humans see their wealth appreciate, they often then go spend it on things.
That's not what I said, though. So I'm trying to take a snapshot point in time.
Okay.
And I'm saying
maybe a better way to do this is, let's say it's not Bitcoin, let's say it's any other asset class, like gold, right? Like, if that scenario happened with gold, is that bad? I think is the question that Vinny's trying to get at.
Yes.
Yeah, we certainly use gold, and I've never heard of anyone. We use gold as a store of value, and I've never heard anyone worry about the Gini coefficient of gold's distribution early on, right? Neither have I heard it for any other asset class. Typically, we use the Gini coefficient to measure income inequality for countries, because the income inequality in countries means people can buy political power.
I'm not using. So the Gini coefficient is like, I'm from South Africa, which is the highest Gini coefficient in the world. Okay, so if anyone knows how that works, it's a South African, right? Who's been both privileged and underprivileged. So I was born in apartheid, so I can tell you now, I've seen both sides of the coin there. What I'm asking you is, and whether forget what it is, forget whether it's Bitcoin, gold, as Preeti said. If the wealth in the world suddenly magically today was concentrated in the hands of less than 1% of the population, and we talk about 1/7 of the wealth of the world, would you think that it would be good or bad for humanity as a species?
Well, we're ignoring quite a few different things in this scenario. But if we want to brush that aside and go for the emotional appeal, which is how would we feel hypothetically in I would not consider a realistic scenario that the wealth gets so highly concentrated. With Bitcoin's much more different than any of the other asset class that ever existed. With Bitcoin's proof of work function, the only way to acquire a Bitcoin is either to mine it or to buy it. There was no free lunch. And I think that's an important distinction versus other asset classes. And it wasn't acquired through force. It wasn't reappropriated. Bitcoin was earned.
I'd love to go back to that topic, but you're still deviating from the question, right? Because So I'll put my question back on hold, and let's go to your point. So the point that you're making then is that at the starting point where Satoshi announced it to the world, the entire world got a text message on their phone saying you can start mining Bitcoin today. and everyone had equal fair opportunity because they were all plugged into the message boards that Satoshi broadcasts the white paper and the Bitcoin code to, and everyone had equal amount of technical skills, financial ability to buy hardware and mine coins. Is that what you're saying? It was fair?
I'm saying it was fair because from a marketing standpoint, which working on writer growth and growth marketing teams at Uber, understanding how you message a product is critical. And Satoshi was a brilliant go-to-market strategist. So who cared about Bitcoin? Who cared about cryptocurrency? Back in that day, back in 2010, I didn't care. 2009 when he published the code, 2008 when he published the white paper, who would really be able to grok that message?
Did you hear about it the day you announced it?
No, because the cryptographer mailing list was the only messaging board that really gave any, would really care about it.
An exclusive group of intelligentsia had access to this, right?
No, because he announced it there and then published the code for anyone to download and start mining day one, January 9th, 2009. And he gave a 2-month heads up with the white paper so people could be aware. Now, these are the exact individuals who would be interested in this sort of technology. If they had posted it on my Facebook wall, I would have been like, what the heck is this scam? Back in 2009, 2010, right?
Okay, so it's fair from that point. So the smartest, most tuned in people to the way society needs to move and evolve got an early head start on Bitcoin, and that's fair, would you say?
In a spectrum of fair, it was the most fair launch you could conceptualize. And what's even more important about it is that Bitcoin had no value for a year and a half. That's why, Jeff Garzik, or I forget if it was Jeff or Gavin, had a faucet. I wasn't that early, so I don't remember this. But from what I've heard, Gavin or Jeff had a faucet that gave away free Bitcoins.
Okay.
So are you I guess just to clarify, Dan, are you saying that we can't defy nature and this is just how it is? It was a fair distribution and this is how we're ending up and there's no way to fix it if that happens?
Well, first I've asked for a definition of fair, and I haven't really gotten that yet. And the world really isn't fair in that sense that everyone has the same opportunities. We all were born and we landed randomly in certain roles and we had certain opportunities that we took advantage of. We can't go simultaneously to 7 billion people across the planet with each opportunity that presents itself for each asset and each investment ever made. And I think that's a little bit unrealistic to expect that for cryptocurrency.
You give me an end state for 2050, right? In 2050, there's 10 billion people on Earth, according to Hans Rosling. What do you think the distribution of Bitcoins look like? What do you think the wealth distribution looks like at that point?
I mean, I can't really hypothesize what it'll be.
How many coins does Satoshi still have, do you think?
Well, we don't know exactly how many coins Satoshi has because we use the extra nonce fingerprinting of his mining activities to hypothesize a number that we think is Satoshi's, but that number is between 700 and 1 million coins, but that's hypothetical. We don't actually know that.
Sure.
It could have been any early miner.
But if you look at the early coins, there's at least 2 or 3 million coins sitting in the hands of a very few number of people, right? Like a handful of people, maybe a couple hundred, right?
Yeah, they spent the proof of work energy to mine those coins before they were worth anything.
Fair enough. So they made a really great investment, right? It's like buying Manhattan back in the 60s.
Yeah, exactly.
And Manhattan is still owned by the people. People bought it, don't own it anymore. That's right. So let's get to 2050. Okay, so you've got these coins, and let's assume 3 million coins haven't moved, and they're still in the hands of a few hundred people. So, and let's assume that hyper Bitcoinization actually happens, and the whole world's running on Bitcoin. We then have 15% of the world's wealth in the hands of a few hundred people. How much power do those people have to influence the world?
Well, again, through each wave, through each market cycle, we have on-chain data, again, via Unchained Capital did a great analysis of this. Drew Bansal, who has, I think, a PhD in physics, did this analysis, which was phenomenal.
I've seen it. It's good. But it really applies to aged coins. So coins that
right. We look at the geological evidence of how coins have moved through time. And I think what we see is really interesting. As the price of Bitcoin goes up and down, we see the incentive for the old hodlers to move their coins to go sell them. We are humans after all. We have needs, we have wants. When my purchasing power, when my wealth increases 10x, well, I might go buy a car or I might go buy a house.
But you spend less of it as a percentage as it goes up, right? So the market need to go down.
Yeah, it depends on if you believe in it or hodl the whole way. I find very few early hodlers who actually hodled the whole way. I can't name them, but I know some extremely popular or really well-known people in the space that have sold everything at $10 or $100 because they bought it at $1. They 10x their money. I mean, the risk back then was enormous. And Vinny, you know this, the risk with Mt. Gox, the risk with like private key management. Not many people hodled the whole way.
Your arguments are good. Your arguments that capitalism is good. I buy into that. Like I'm fully on board with you on the capitalist side of this. Like people should get a return. The point I'm trying to get to is what do you think the end state is? Okay, let me ask you this question. In an ideal world, what's the most wealth of the world that a single person should own?
That's a really good question.
It's a great question. I'm not sure if I'm qualified to adequately answer that.
Okay. Fair enough. So then do you think at least that we can do better? Okay, so the traditional finance system already sees the same effect, right? Like wealth is highly concentrated. And if we're moving towards a similar system with Bitcoin, do you think that's a good thing or a bad thing?
Well, to be clear, let's use Satoshi's coins as a hypothetical example of a large amount of wealth being owned by a certain individual. 5% is far less than most equity distributions for startups.
But this is money supply. This is global money supply.
Sure, but Satoshi
you can't compare the two, right? Global money supply is issued by central banks. We're trying to move to a world where we have decentralized power.
Satoshi took an astronomical risk that was far greater than any one company has ever done in the history of humankind.
So should he rule the world?
No, and Satoshi made it pretty explicit that money doesn't really interest him. I use him because that's the pronoun he used. To the fact that he hasn't touched his coin in 10 years speaks to that his motivations aren't exactly financial. And I don't really expect him to come back and go, YOLO, market sell. I think Satoshi is much more calculated. And we look at the go-to-market strategy and the planning. And is it fair? Satoshi tried to make it as fair as possible. He told everyone about it he told everyone who would be interested about it. He made it available to mine day one. Health Vinny was mining day two. He decreased his mining through time. His hash rate decreased as more people joined the network, and then he never touched his coins. So I'm not really sure how you could make it more fair than that. And the coin circulated freely for a year and a half because they had no value, which is a pretty hard thing to do again. And Bitcoin's open, so anyone in the world could have downloaded the software. Where I can't participate in VC deals if I'm not accredited. Like I can't participate in private equity rounds of companies if I'm not accredited. I can't go buy commodities unless I have a brokerage account. Bitcoin, all I had to do is run the software. It was the most open participation ever in human history for any asset class.
And what's interesting is that despite it being that open, it's this concentrated. So it begs the question of like, what is the purpose of this whole decentralized effort if it's going to end up, again, concentrated?
Well, let's jump into that. So hypothetically, it's concentrated.
Yeah.
Right. So what's difficult is to really build out. So at Uber on writer growth and intelligence, we had extremely sophisticated data models. We had extremely sophisticated data scientists. And having that data-driven methodology, Vinny, I agree with you 100%. We should try to look at the data and be objective about it. The problem is the data here is very hard to calculate. The only way to do this would be to have like tax software. If you had tax software and you were able to look at someone's entire portfolio and you could look across all those different participants with your tax software, you might be able to calculate something like this.
Even if you adjust for like the exchanges and the mining pools, etc., like I think like you're gonna still find that it's highly concentrated. So we can't really deny the fact that it's completely like fair, right? Like I think we can all agree that it's not a fair distribution right now, right?
I would push back on that because, like I mentioned before, the launch was as fair as it could be. And second, we don't have any data to prove that it's...
The launch was fair, but sorry, that's the wrong question. The concentration is not fair right now.
Well, we don't know if it is or not, but we hypothesize it might be.
Okay.
What do you mean you don't know if it is or not? Like, what is the upper limit of the number of people in the world that own Bitcoin today? You said 50 million. It's probably a good number.
And that's why I said if we were going to evaluate Bitcoin on these parameters, we should also look at other asset classes, and that would be the only fair way to look at it.
Oh, no, I agree.
Fair enough. So how do you think Bitcoin compares to, let's say, like gold or any other whatever asset class you want to compare it to?
I actually spent some time trying to look at gold's ownership. It's super tough. There aren't a lot of metrics to quantify how many gold participants there are in the United States.
Mm-hmm.
I would say it's probably a bit more than Bitcoin, but maybe not as much. How is that gold distributed? I'm not sure.
Yeah.
Again, the data is the problem here. We don't have a lot of data.
When you say not as much, are you trying to say there's? I mean, my view of understanding gold is there are probably hundreds of millions, if not billions, of people who have gold out there right now today.
I tried to research the numbers, and it was super tough to find U.S. Owners.
No, I'm not talking U.S. I'm talking about global wealth.
Oh yeah, I'm sure it's in the hundreds of millions, if not billions.
Yeah.
But yeah, it's super tough to calculate that, right? The physical ownership of gold is often done with cash or transacted with cash, and it's hard to really track. So
would you argue that gold is more distributed or less distributed than Bitcoin? Because your number is 50 million people for Bitcoin.
Yeah, gold more distributed. In its lifetime as a money, it's had a lot longer than Bitcoin. So we might see similar distribution for Bitcoin in a much.
We might. So based upon the data and whatever else you're proposing, yeah. It all seems to be a might, maybe, possibly. It's all, conjecture at this point. Let's assume nothing changes. Let's assume today everyone just adopts the doctrine of HODL and they don't sell a single coin till $10 million per coin comes. Do you think that would be a problem?
I don't think that's a realistic scenario as humans.
But I'm not asking realistic. I'm asking. The whole point of using extrapolation is to get to an endpoint where we can agree or disagree that this is good or bad, right? And I think, like any reasonable person should say, at $10 million a coin today, with the current distribution being 50 million people holding 1/7 of the world's narrow money supply, that is probably not a healthy thing for the world population.
But like I said before, through the different boom bust cycles, we've seen more.
No.
Whether is that a bad scenario? And I think. I would say, isn't that a bad scenario?
It's a bit of a straw man argument here. Just kind of propping it up.
It's not.
We're just trying to say, okay, if that happens, is it bad? Yes. So now the next part, Vinny, go ahead.
Okay, so can we at least agree that would be bad?
I would disagree as well with that.
So you're entirely comfortable with 1% of the world population owning 6/7 of the world's wealth.
What I'm saying is I'm a capitalist, and for someone to determine who owns what, I'm not in the position to dictate that. Now, in a socialist system, we could do that. We could go define who should own what.
Okay. I'll take it back. If the world's wealth, let's say we measure the narrow money supply today at $28 trillion. If one man owned $27 trillion of wealth, would that be okay for the world, do you think?
I think it's
a question. It's a question. It's a moral sort of ethics question. Like, you think it would be okay? Do you think the world would be
if they produced or they risked capital that enabled them to accumulate that wealth?
Let's say they invested in they bought up all the Bitcoins today and they rolled it out, whatever.
I don't have a problem with that. No.
So you don't have a problem with a world where one person could own fully 97% of the world's wealth?
It's a silly situation.
But you don't have a problem with it.
Through capitalism, if they earned that by risking their capital and they were rewarded with that return, then they earned that.
Okay.
I think that's where the moral disagreement is.
Yeah. This debate won't go very further. If out of 7 billion people, Dan feels that it's okay at some endpoint for one person to own 97% of the world's wealth, and it'd be okay for the society we live in today, I can't really argue with them anymore.
Well, let's work on that spectrum.
Debate.
Let's work on that spectrum, Vinny. So what is fair then?
No, that's not the question.
No, definitely is. I answered your extremely hypothetical.
So do you agree that it's fair or not fair? He risked capital and he acquired 97% of the world's wealth.
And I know, and I answered your question, which I found pretty out of bounds of what like a rational argument should be. But answer me this.
What is your answer?
No, I told you it's fair because they risk their capital. As a capitalist, they risk their capital to earn that return.
Okay.
And my question for you would be, what is fair then? Who decides what's fair?
Okay, so who decides what's fair? So let's just understand something. Did you ever? I mean, you've seen governments collapse, right? I've witnessed governments collapse firsthand, South African government, etc. When governments collapse, what do you think is one of the major triggers of government collapses?
I'm not sure.
And governments being overthrown. It's obviously like wealth, economy, and oppression, right? Oppression to the point where, like, minority oppression is a huge issue, right? Especially in South Africa, apartheid South Africa, you had a situation where 5% of the population was oppressing 95% of the population, and they just couldn't handle it anymore, right? So it came to an end. So do you think a world where 5% of the population could effectively control everyone else in a peaceful manner, do you think that would lead to world peace, or 1%?
Vinny, I did answer your question. I would appreciate if you answered mine.
And I think Dan said if they earned it, I think it's fair. And so if that's the case, then the next question for you, Dan, is like, do you think it might be fair if they earned it, but do you think in Bitcoin's case that would be a good outcome in your opinion?
And Preeti, I'd be happy to answer that question, but I would prefer for Vinny to answer.
Yeah.
Who determines what is fair if capitalism doesn't dictate who earns what? How do we determine
capitalism exists under rule of law, right? Capitalism does not exist in anarchy. Do we agree with that point?
Somewhat disagree, as they're somewhat intertwined. It's like they influence each other. So,
okay. So let's take an example of a country where pick a country that doesn't really have a strong rule of law, lots of corruption, but there's a ton of capitalism happens. Okay, it'll be an unnamed country because I don't want to stir up any geopolitical issues here. So is stealing okay? Because like if you accumulate wealth through stealing, and the law doesn't prosecute or uphold the law, and there's no law against it, is that okay?
We're going a little out of bounds of what.
No, we're not. I made the assertion that capitalism exists under rule of law, and you're saying it can't exist within anarchy.
Anarchy doesn't assume theft, by the way. But we're going on a tangent here. I'd prefer to stick on the point of going, okay, is there a committee? Is there voting? Who votes for who holds what? If capitalism doesn't decide who gets what, then who does?
Free markets.
That is capitalism.
Yeah.
No. So you think a world can exist where the wealth concentration is like the people are trading with themselves? Like if you control 99% of the world's wealth as one individual, who do you trade with?
I already answered that question. I'm asking you who.
No. That's not the same question. The question I'm asking is like, so free trade is what builds capitalism, and diversity of people holding currency and being able to trade with each other. So if one group of people held all the wealth and they just traded with themselves, they wouldn't really couldn't function.
Capitalism is about the efficient allocation of capital to the highest ROI entrepreneurial endeavors, and you take on the risk by allocating that capital. And as we've seen through time, very, very few family dynasties live past 2 to 3 generations. In addition, we've seen through Bitcoin hodl waves that most old hodlers don't hold on forever. They're human beings. And so what I'm asking you is, how do we determine who gets to decide who gets what?
But isn't Bitcoin governed by a small circle of developers?
No, because the Bitcoin developers the review of that code is undergone by hundreds of developers. 2, people have to choose to upgrade. So you have to choose to upgrade your node, or the miners have to choose to mine on that network. So it's more of a standoff between the miners, the node/hodlers, and the hodlers, by the way, dictate market price.
Yeah.
And the engineers.
Yeah. Okay. So then I think overall, where I'm seeing the disagreement between you two is Dan, you believe that in a capitalistic system, and I think Vinny also probably does too. But I think Vinny's point is that sometimes capitalism can lead to extreme scenarios. I mean, you're seeing this in the modern world too, where it's predatory capitalism happening. And so do you think that we're probably moving to a similar scenario in Bitcoin, or do you think it's a better scenario than what we have in the traditional markets?
I mean, we've seen coins change hands over time.
Yeah.
For example, in 2017 alone, 15% of coins were 15% of all coins, not just coins that were total supply minus hypothetical lost coins. 15% of all coins were moved. And so That was just in one boom bust cycle or one market cycle. And so that's a pretty substantial amount of churn in the number of hodlers. Now, who knows if they sold that or moved it or did this or that with it? And I'm hypothesizing.
So
look, I get it. We're going for the emotional pull here. We're going for how does that make us feel? Like not versus like how does a capitalist system allocate capital, but how would people feel about that?
Yeah.
And the way that I positioned it before is that Bitcoin was always free to participate in, and there was no free lunch. Satoshi didn't mint his own coins, he had to earn them. Same with anyone else. And so I think we can look past in the past history and look at the risk and look at people exerting the proof of work and understand that no one magically added a zero. It was always transparent from day one. Anyone can go mine. Anyone can go buy. I mean, buying's a little bit harder because you have to find an exchange. Back in the days of Mt. Gox, it was tough. You had to wire money to Japan. That was a lot trickier to do than Coinbase or Kraken.
Fair enough. But there's an interesting question from the audience where he says, wealth concentration poses liquidity risk, right? Because regardless of whether it's fair or not, from a free market perspective, liquidity does matter, and liquidity is endangered when the coins are concentrated in a very few hands. So what do you say to that?
Yeah, so Satoshi hypothetically only owns 5% of all Bitcoins. That's much lower than most publicly traded companies' CEO concentration.
It's money supply and stock are two different things. But you keep going back to it. So let me ask you another question. There was a proposal of one of the Bitcoin core developers to fork Satoshi's coins out of Bitcoin to reduce the risk of concentration. Would you support or be against that?
Of course not. I'm not here to dictate who owns what.
But if the network supported it and everyone upgraded to that BIP and enforced it, how would you feel about that?
I think a very, very large majority of Bitcoin hodlers would be completely against the idea of forcibly taking someone's coins and reappropriating them. It goes against the core ethos of the Bitcoin community. In Bitcoin, the software is really governed by the people who believe in it and use it. So I find that an extremely unlikely event, and that would likely not be the Bitcoiner community that we see today.
Interesting. So Dan, do you think that it's just going to be that over time, by the fact that it's more people are educated about it, et cetera, that there'll be more people who get their hands on Bitcoin, and that's what will kind of disseminate the concentration? Like, how do you think this ends up in 10 years or 50 years from now?
Yeah, that's a great question. I think as we've seen, and as we all personally know, I don't like to use personal stories because it's not really objective, it's more subjective. But we all know we bought things after the coins that we held on to appreciated. I bought things. I'm sure you both bought some stuff as well. No one hodls the whole way. No one hodls the entire time. I mean, look, we all live in expensive cities. We all live in California. To buy an apartment in San Francisco is $2 million for a decent apartment. That's quite a bit of money. And, eventually I want a family someday. That's going to cost me money as well. I like to live a life. And I think we've seen that happen with hodlers either taking that, investing it in other asset classes, spending it on certain things. We can expect humans to act like humans. And when their purchasing power increases dramatically, they're going to go spend it or lend it or invest it.
Well, I do want to go back to your previous point, though, on the comparison that you made to CEO comp, because I think there's a bunch of questions coming from the audience about that. And they said, they don't think it's fair to compare CEO comp to a global permissionless protocol. And the question is most shareholders of companies are governed by law. They can't, unlike Bitcoin holders, dump their coins on the market. So how do you kind of bridge that disparity? That's not a fair comparison. Would you agree?
Yeah, certainly the owners of certain stock have to publicly disclose that before they do that. But concentration can be accumulated for hedge funds. Hedge funds can accumulate positions in stocks and choose to dump or buy them at will. They don't have to disclose their potential selling of their portion of the company like the CEO does. All I'm saying is that the concentration of 5% or more of equity of a company is pretty common. So that's what I was pushing back on. Is Satoshi's percentage is 5%, and there's hedge funds or CEOs or executives that have 5% of companies quite often.
But I think 5% of a company is very different from something that's trying to be a global money supply, which is I think what Vinny was trying to get at earlier too, right?
Yeah, don't disagree. And that's why Satoshi's never moved his coins.
But okay, so if he moved his coins, how would you feel?
He's free to do what he'd like with them. And
how would you feel about it?
How I'd feel with it is it wouldn't change anything how I feel about the protocol.
But you use the fact that he hasn't moved his coin as an argument that
to look at the last 10 years and expect him to then move them in the next 10, I find unlikely. And I think he uses that to demonstrate his restraint and understanding that it could be perceived as unfair. And Satoshi tried every single method.
In your opinion, I mean, this is conjecture, right? Like I've heard, there's stories that he could be dead, he could be in jail, he could be.
Oh yeah.
There's lots of reasons, right? So you're assuming that he's communicating it. So you're projecting something which you have a belief upon, but there's no real factual evidence either way.
I use the 10 years of data where he hasn't moved one coin.
No. The 10 years of data shows that the coins haven't moved. The reason behind it, no one knows. You have an opinion of what it could be. But just be careful to not conflate, facts and fiction. Like your conjecture here is that you think you know Satoshi well enough to believe that he wouldn't move the coins for X, Y, Z reason. But it could be as simple as Occam's razor. He could be dead, right?
Yeah, I don't disagree. I spent a lot of time.
It's just hard to as a third party. It's kind of like hearsay, right? So I would suggest not using hearsay. In those terms, because you don't know.
I think that's not exactly a fair interpretation of Satoshi's intentions, because if we read a lot of Satoshi's early writing, if we look at the methodical and carefully planned out steps to launch Bitcoin, he definitely wanted to make sure that people felt this was fair. He did a proof of no pre-mine, which is the first message in the first block of the blockchain, which is UK Chancellor on the second verge on the second bailout for banks. Satoshi, before pre-mines were a thing, Satoshi wanted to show that it was fair. So he took every effort possible to show that. Now,
fair in whose opinion, right? Like fairness is very subjective. Like exactly. I'm just trying to get to facts, right? It's like we should move away from subjective.
Right, and that's why I asked when we started this conversation to define what fair was, which we hadn't. But to dig in, like I said, I want to reiterate the points I made before. I told everyone about it a couple months ahead of time. People were mining day one. He reduced his hashing power over time as more people joined the network because someone had to do it, and he was like, "Sure, I'll do it." Bitcoin's had no value for a year and a half, and he's never touched the money. Now, to your point around not touching the Bitcoins, I am extrapolating intention when it comes to Satoshi's Bitcoins. I find it unlikely that the founder of Bitcoin lost his private key. So I've eliminated that as a potential scenario. It's possible, but I find it unlikely. That's certainly one possibility. Another one is that he currently has the private key, but is dead or never passed it on. Another one would be that he's currently alive and has the private key and has decided not to move it. He also could have burned his private key to reduce the temptation. To be frank, we don't know. And so, but what we do know is that they haven't moved, despite Satoshi, I think, becoming, the 5th wealthiest person in the world?
I have no idea. You have
at the peak in 2017, let's do 5%. Yeah, he was one of the wealthiest people in the world.
Yeah.
I'm certain Satoshi probably bought some Bitcoins or mined some later on. Satoshi's not going to be a poor individual. They're likely very wealthy. And so I just don't really see, an issue with him having 5% that he's never touched. I mean, other than, unlike any other founder in history, he hasn't touched his money.
Fair enough. So Dan, I think I do want to answer the question that you're getting at, which is like, we haven't really defined what is fair or what would be fair. And so Vinny, do you have an answer to that? Do you think that the distribution was not fair, or do you where do you fall on the fairness spectrum?
So I think, it's upon us as humans to have a society where we can get to a point where there's no real poverty in the world. Children are not dying needlessly. There's no, some sort of, there's no need for wars. Kind of like a world peace and a basic level of living that everyone can have, right? So basic healthcare, basic food, basic etc. Right? If you have wealth concentration as high as you're saying, that's never going to happen. Not at the current levels of wealth in the world. There's not enough wealth in the world if we had $28 trillion in money supply, owned by one person, or 27 by one person, one by the rest of the world, that you'd have a situation where the world is in a good state, where people are not dying needlessly. And so that's what I think is fair. I think we should get to a world where I'm a capitalist, I'm an entrepreneur, I've started 5 companies, I've made my money that way. Like, I'm an entrepreneur who believes in capitalism, but I believe capitalism should have a conscience as well. And you should think about the world and the way we leave the world when we leave one day. And if it does take 2 or 3 generations, that's okay. But the end state is some level of wealth distribution to the rest of the world, that people can live and, live in an apartment, even if it is in San Francisco, live in an apartment, afford some food, and not have to have people out in the streets and the homeless problem, which San Francisco has in spades, right? So how do we get to that end state if the wealth concentration is too high? And so I would push back and say, yeah, I'm not a Bernie Sanders, where I'm a socialist, okay, but I'm also not an anarcho-capitalist who thinks that some greedy person should own 5% of the world or 10% of the world's money supply just because their capital was in the right place at the right time and they got lucky in life. Like, I think we have to figure out what is the right level of fairness. And so, and because everyone has a different value system, and some people just care about themselves and maybe their friends, family, etc., and not think on a global scale, it's very hard to define what fairness is. But I think fairness would be coming up with a vision for humanity where everyone who's born into this world can live in this world. But I don't believe it happens before we get to 10 billion people. I think the world population has to stop growing. We have to peak out, and then we have to do raising the standard of living for everyone in the world. So if you watch stuff that Hans Rosling's put together, he was the world's greatest data scientist around human populations. We're on the right track as a society, and the wealth gap is lowering in lots of parts of the world, and the provision of human services is improving, and that's with the aid of technology and lower costs, etc., that enables us to get there, and healthcare is improving, etc. But it's a multi-generational task, and I just think that wealth distribution needs to be reasonably flat until we get to that end state, and then it can get more lopsided. But as long as everyone in the world can survive, it's great. But I just don't see a world where high levels of wealth concentration with a few people who, and by the way, the hodl mentality doesn't work for me, because it's not putting capital to work, in a sense, right? You sit there with the capital, you wait for everyone else to do the work around increasing the price, and you benefit from it. So there's no work expended in being a hodler.
What do you say to that, Dan? Like, no work being expended for being a hodler?
I would throw it right back at Vinny with his venture capital investments.
Oh, no. I work with my startups, and I help startups. I'm available for them calls. I contribute. I don't just sit back and watch the money grow.
Well, what you did is you risked capital, and then you just
no. See, so early stage investing is not. This. You've been in early stage for a while. It's not as simple as putting money in and boom, it goes. It's not like buying bonds. Okay, you have to work the human capital. The capital pays for human work. Okay, the capital pays the bills. The capital doesn't make money itself. There's work. There's real work that goes into it. Rolling up your sleeves, writing code, building product. I don't know why I have to tell you this. You know that it's not. The money just pays the bills. The work is done by people.
Of course,
in hodling, you just hold it. You just hold the coins, and the value increases. You don't have to add anything to it.
But as an investor, you allocated capital into that company. You didn't do the work. You purchased some of that work from the entrepreneur by purchasing some of their equity. Future work, right?
You're funding the future work.
Right. And so you risked your capital in trusting that they might go deploy or eventually execute on that objective, which is to go build and scale this company.
So when you buy coins, who are you? So the difference between primary and secondary share issuances, right? So if you're buying shares, secondary shares in the stock market, the money doesn't go into the company. You're just buying it from someone else. When you're buying shares from the company, that's primary capital going into the company's books, and that's being used for operations and growth. When you're hodling and you're buying the coins, like, who's getting the money, and how's it, like, what?
So first and foremost, you risked capital by purchasing Bitcoin. Just like any other speculation on any other asset, we can get into the nuances, the differences between private equity placement versus other things, but let's focus on the main objective of deploying capital and what you're doing with that, which is mainly around I'm allocating it across different asset classes, and I'm risking my capital in the hope that it will equal a return at a later date. That return is often somewhat similar to the volatility or the risks that I'm taking. That's why VC, early stage bets pay off so well. With other asset classes that are more mature or just much less volatile, you take on less risk but get less of a return. That's kind of the general gist, right? So hodlers breathe life into the Bitcoin network. Without Bitcoin having value, there would be no developers, there'd be no hashing power. And so hodlers, the belief in a new money is what is required for it to succeed. Hodlers gave Bitcoin life. They breathed it into the protocol as Bitcoin.
But you said in the first year that Bitcoin had no value, but people still contributed.
Just barely, though. It's a tiny, tiny community, and there were no products. There was no.
So if everyone hodled and if everyone in the world today said, okay, we're not going to spend a single Bitcoin.
I think people deserve the right to preserve their purchasing power, which is what hodling does for them. They're speculating on a future speculative store of value, as Jerome Powell, the Fed chairman, says.
But that's depending on when you buy it, right? If you buy the top of a bubble cycle, you lose money, and like Bitcoin lost 90% of its wealth or 85% of its wealth in the last cycle. People lost a lot of money. A lot of uninformed people lost a lot of money because they believed they just had to buy 20,000 and hold.
We can zoom in and out of any asset that's ever occurred in human history and look at the performance over any time period.
But do we think it's okay for an asset like Bitcoin to have these sort of boom bust cycles where people lose money along the way? Is it like in service of the greater good?
It's entirely the reason why we're here. If there were not speculative bubbles, no one would have talked about Bitcoin. The awareness of it would have never been so high. And it's entirely purposeful to have the volatility because it acts like a viral loop. And that's what's so brilliant about the marketing strategy is that Satoshi plugged in one variable into his model, which is human greed. Will humans speculate? Will they speculate on growing their purchasing power greatly? Yes, they will. And Bitcoin has survived 10 years, grown to a 200 billion market cap, and has deep liquidity and has thousands of companies working on it because of that speculation. And that's entirely a good thing.
You know what's fascinating? It's fascinating that regardless of how fair the distribution was or how fair the distribution was not, which is comparing Bitcoin to a traditional finance system, we're kind of ending up in the same place. It's almost like maybe this is just how it's that's how nature takes itself, and that's where we end up. And maybe there is no such thing as fairness per se, and the common debate about equality of outcome versus equality of opportunity. And I think, Dan, you're arguing for equality of opportunity, but that opportunity today leads to a very, very unfair outcome. And I think what Vinny's trying to say is we can do a little bit better than what we have today.
And I'd like to agree with Vinny on one thing, which is his outcome. I wish the best for humanity. I hope that we increase lifespans, we increase quality of life, we reduce pain and suffering, and we increase opportunity. I merely disagree as to the means to get there, which is that, if we look at the last 100 years, as populations exponentially increased across the world, we saw poverty rates drop. We saw malnutrition rates drop. We saw life expectancy increase dramatically. And that was from not altruistic endeavors, but through capitalism. The efficient allocation of capital by individuals and companies to then go build things that are faster, cheaper, or easier to use than for the world population. And so that's where I believe humans should respond, or humans do respond to incentives. And the incentive in capitalism is, hey, if you make something better, you'll get money for it. And that better product you make serves the whole world. And the amount of money that you make, sometimes, I'm not saying it's perfect, but a lot of the times it's equivalent to the impact you had on the world. I'm going to use one random example, which is Steve Jobs. He deserves to have that capital because my iPhone and my MacBook that I'm talking to you on right now changed the entire world and increased productivity and made our lives better. And so I don't know of a centralized body that can make decisions as to individuals who risk their capital and then earn that reward. I don't know if a centralized body has enough data to determine or the moral, sort of the moral high ground to determine who gets what. Is $1 billion enough, 2 billion enough, 5 billion? I don't know. And that's the thing is I don't know, but I do know a market mechanism that rewards people for risking their capital, and that's capitalism.
Fair enough. Okay, so then I think the question that I have for you is with the traditional capitalistic system, I think people talk about predatory capitalism because they say that for people who aren't necessarily born into the right scenarios, they don't have the same equal opportunity. Do you think that Bitcoin does a better job of giving people the opportunity to have wealth?
I think Bitcoin, because anyone can go run the mining software anywhere in the world, it's pretty easy to go buy a Bitcoin and store it wherever you'd like, whether it be in a custodial or non-custodial arrangement. It's about as open as any other asset class has ever been in human history. Much more so than like U.S. equities or bonds or stock and private tech companies. Bitcoin is about as open out of any other asset class out there. So I think
no one's arguing that point. It's just that who's the ultimate beneficiaries of the end state? That's the real question today.
Yeah, I think Bitcoin fundamentally is a human rights issue. It's about freedom, and that's where I really like Alex Gladstein's thoughts on this, which is that Bitcoin is a free system. It's not censorable on chain. When you hold your asset, no one else can take it away from you if you manage your private key well. I think the ability for humans to store their value, which value or money is a representation of stored time and energy. It's some of these people's entire lifetimes, like a retirement account is your entire lifetime. And the ability to store that in a decentralized system that can help you preserve that wealth, I think is an incredible opportunity for humanity.
But you say preserve the wealth. Preserve the wealth on what time scale?
Exactly. It depends on the individual.
So if you buy 20,000, you've lost 50% of your wealth in today's money, right?
If you zoom out, who knows how much they'll make? We can arbitrarily pick.
But this is my point, right? So like it's a speculation account, right? It's not a wealth preserving.
To be clear, store of values do not necessarily preserve purchasing power on a granular day-by-day level. If we look at the price of gold, it fluctuates quite dramatically.
Well, okay, this is like gold has not fluctuated between a range of 3,000 and 20,000 in
the reason why
in 20, 30, 40, 50 years. I can't remember when it did have that much fluctuation.
Parker Lewis just had a great article on how volatility isn't associated, conflating volatility and store of value is kind of a misinterpretation of store of value. Store of values are the parameters it has as money that make it a good money, combined with its hard to seize nature and immutability.
When you say hard to seize, it's like I don't understand the hard to seize nature. Someone comes to if someone comes to you with physical threat of violence, they can seize your property, right? In any part of the world, it's like rule of law which prevents that.
Yeah, so you're talking the classic wrench attack.
Yeah, exactly. So like the whole like hard to seize thing is what you're saying is the ability to hide money from the government.
No, I'm not saying that at all. I'm saying the ability for you to store your wealth against any much more powerful aggressor. That could be anything. To be clear, I'm not advocating for someone to, evade taxes or anything like that.
But I'm saying under duress, nothing can be protected, right?
Sure, but right now
you'll give it. You'll always give it up, right?
Well, hypothetically, if they know how many coins you have or where you have it, but right now, all the U.S. government has to do to seize all the bank accounts across the United States is just make 5 phone calls.
Fair enough. Yeah.
It makes the effort exponentially more difficult due to the difficult nature of tracking each individual person's allocation of Bitcoin and then going and enforcing it door by door.
On a network basis, I would agree.
Yeah.
Which as well, like if that's the policy, it's likely that there's structural problems in the government if they're knocking down doors to seize assets. And the government is a representation of the people, and I don't see that as a tenable government for a very long time period.
Fair enough. Okay, so I want to wrap up as we're reaching the hour. So if people were to only watch this last minute and you had 30 seconds to kind of sum up your argument, what would you say, Vinny?
Oh, my argument is that there is non-zero risk of hyper wealth concentration within the 50 million people that have Bitcoin today. If Bitcoin went to 20x up, the wealth concentration is high. It's a risk to global society. Then I would say Dan's argument would be that people will sell on the way up, even though the doctrine of HODL is what everyone says. Don't sell. How do you, like if we read Twitter comments and forums? How can you ever sell your bitcoins? I'm never selling my bitcoins, etc. And so the two are at odds with each other. On the one hand, the community has this like anti-selling mentality, and that you should hold your bitcoins forever. But then Dan's argument is that people will sell along the way, and therefore the wealth will be redistributed over time. But I think the key point I want to make is at what end state and what amount of wealth concentration would we be in a worse off place in society today? And I don't have the answer to that. I don't think anyone does. but it's just something we should be aware of, that wealth concentration within asset classes can lead to the same problem we have today with the current state of global finance.
Awesome. How about you, Dan?
The ultimate objective here is to improve the human condition, to improve the quality of life and the opportunities for individuals across the world. Capitalism, I believe, has the greatest capability of doing that, and we've seen that empirically over the last few hundred years, and especially in the last 100. As populations increased exponentially, the human condition improved dramatically. And that was not through governments or humanitarian efforts. That was through the efficient allocation of capital. Bitcoin, like any other asset class, is about capitalism. It's about people taking the risk on something new, something different, something crazy, and being rewarded for that. And Bitcoin is challenging the global stores of value across the world. And so the appreciation and the value of those coins risked by early entrepreneurs in the space are worth a lot more because they risked so much. They risked everything. They risked insurmountable odds. I mean, the price of Bitcoin today reflected what the whole world thought it was worth. Because if it was different, the price would have been different. And as we see in the early prices, not many people believed in it, but some people did, and they were rewarded for it, just like any other asset in a capitalist system. And so I agree, our objective is to improve the human condition. I think through capitalism we can do that, and Bitcoin is just one of those efforts.
Awesome. Thanks, Dad. I think you guys have very compelling views, obviously very different views, and some people will probably fall on either side, but it was really cool to at least see those arguments presented, because I think what's interesting is like we're bubbling up to almost like a capitalistic versus socialism argument, equal opportunity versus equals outcome arguments, like the same arguments we kind of have out in the traditional system we're having in the Bitcoin system. So it's at least good that we're starting the conversation. This is definitely not the end of it, and I think it's good to continue the conversation. And if any of you want to reach us, we have Twitter handles, so tweet at us, and we'll also post the link to the live debate as well. So thanks for both of you for joining us.
Thanks, Pete. Thanks, Dan.
Thanks for having me.
Yes, bye.